Dear students, good evening again. Today we are going to discuss the income statement, and especially the income statement for the companies. The companies means the limited liability companies where there is a share capital, the concept of the dividend is there, number of shares are there. So we are discussing the income statement for the companies. So the format is almost same like the sole proprietorship or the partnership, but there are some basic requirements which are different as compared to the sole proprietorship or as compared to the partnership. So the first of all, we have a net sales. Net sales is what? The same that we have already discussed how to calculate the net sale. That is the sales less any sales return. So we have other names for the net sales. It may be like a net revenue or the total turnover of the business. So this is what basically the net sale is the total sales of the business less any return. So this will be considered as the net sales. Then after that we have a cost of goods sold, that is also called as the CGS or cost of goods sold. Now we have two different types of the cost of goods sold. It can be for the company which is a trading company, or it can be for the production company. Obviously for the production company or for the trading company, we have already done both the cost of goods sold statement, how it is calculated. So you can refer back to those lectures in the financial accounting section. So we have a cost of goods sold. So if we decrease or if we minus or subtract this cost of goods sold from the net sales, what we get the gross profit, or what we call as a gross income. Okay, we just assume that, let's say that the gross income of the company or the sales of the company is a 300,000, and let's say the cost of goods sold is 150,000. So these are just the assumed value. So the gross profit of the company will be how much? It will be 150,000. So this is the gross profit or the gross income of the company for that specific year. Now we have three main things here. If we look at that, we have different expenses. Now the expenses are categorized mainly into the three expenses: admin expenses, marketing and selling expenses, and the general expenses. Now we have to see, like if there is a rent expense, we have to consider the rent of which building. Either the building is used for the administrative purposes, or it is used by the marketing staff, or it is used like a canteen for all the company, like a general. So there are different expenses are there. So all the expenses like salaries, we have to again categorize which salary. The salary of the manager is working in which department? In the admin, in the marketing, in the selling, in the general. So in which department they are working, accordingly we will segregate it. Again, if there is a water bill, internet bill, telephone bill, insurance is there. So we have to consider that cost is related to which category, either the admin or the marketing or selling or the general or distribution. Accordingly we will distribute. So here we just assume that all these expenses, obviously these are the assumed values, so we just consider it as the 10,000 each. So the total is how much? The total is 30,000. So this is the total expenses, which includes the admin, marketing, selling, general, so all the expenses, and the total is how much? That is the 30,000. Now from that value, the gross profit, if we minus that, what we get 120,000. So 120,000 is called the earning before interest and taxes. In a simple way, we can call it as the operating income or the operating profit, or it is called EBIT, or the earning before interest and taxes. So any expense after that, so it is operating profit simply. We have a gross profit, which is just after subtracting the cost of goods sold. Now we have a operating profit, the gross profit, operating profit, and the net profit or the net income. We have three basically categories in the profitability. So the operating profit of the business is 120,000. Then the next thing we have to detect, we have to subtract is what? Is the interest expense. Interest expense or the finance expense. finance charges or the interest expense, means the business is taking a loan from the different type of the banks, or any long-term loans are there, especially there are the dividends, the interest expense may be from the bank, or mainly especially in the countries where there's a debentures are issued, or sometime bonds are issued, so the bond interest or the debenture interest is there, so we have to minus that one, or even the long-term loans from the bank or any other interest expense, so that will be deducted. So we will write here, for example, if it is 20,000, so it will be subtracted. So we have a earning before tax, means this is the profit, but still the business has not paid the tax from that, so it is 100,000. Now the next thing is, what is the income tax? For every business, especially if the company is there, if the corporation is there, they have to pay some tax. It can be like a 20%, 30%, 40%. So let's say that tax rate is 40%. If the tax rate is 40%, so we have to calculate 40% of 100,000. So it means it will be 40,000. So the company has to pay a tax of 40,000 on this income. So the 40% of the 100,000 will be the income tax for the company. So after that, we have a 60,000 value. That is what? That is the earning after taxation. Means it was before taxation, now it is the earning or the profit after taxation, also called as the net income, or also called as the net profit. We can call it as a net profit also. So this is the final result of the income statement, which is the net profit. So if we look at that, we have a three type of the profit. So we have a gross profit, then we have a operating profit. Okay, gross profit is there, operating profit is there, and then we have a earning after tax, or the net profit is there. So the gross profit, operating profit, and then we have a net profit. Why we are calculating these different profitabilities? Because even when we will do the ratios analysis, in that ratio analysis we have so many ratios that are related to the gross profit or the net profit or the operating profit. So there we will use those ratios, and then in the ratios we have to calculate the different type of the profitability. So for those, and also the company or the business want to know that how much is the gross profit, means which is just the cost of goods sold, then how much is for the operating expenses, and then the operating profit is there, and how much is the net profit after paying all the expenses of the interest, the bank charges, the bonds interest, and also after the income tax, means what is the net amount available for the common shareholders. This is also called as the net income, or the income available for the common shareholders. Common shareholders, as we have already discussed in the previous lecture, we have two type of the shareholders, the common shareholders and the preferred shareholders. So the common shareholders, so we have to consider it that the income that is available for the common shareholders. Here we are not considering that is there any preferred shares. There is no preferred shares, so only common shares are available in this company. So the next thing that what we can calculate is what is the earning per share. That per share how much they are earning. So for that, what we need the number of the shares. Let's say that this company has a 120,000 issued shares. So this is what? This is the issued shares. The total issued shares of the company is 120,000. So what we will do, we simply divide 60,000 divided by the total number of the issued shares. So what we will get? We will get the earning per share. So the answer will be 0.50 per share. So this is what? This is the earning per share. Means this company has issued so many shares, 120,000 shares they have issued, and for every shareholder, what is the earning? So that is $0.5. So we can say like the par value of the share, or the purchase price of the share may be $1 or $2, $5, $10, but every shareholder is getting like a $0.5 per share as the earning. This is not a dividend, because depending on the amount of the profit this year and the balance available in the retained earning or unappropriated profits, what they do, they calculate or they decide the dividend. So in the previous lectures also we have discussed that what are the dividend. It may be a cash dividend, or it may be a dividend in the form of the shares, like a bonus share. So that is deducted from the net profit. So availability is there, and then they can decide to give the dividend or not. But this is not a dividend, this is earning. This is just for the calculation purposes, that per share how much they are earning. Obviously we have a complete standard on that, that how standard means International Accounting Standard, IFRS, International Financial Reporting Standard, that how this earning per share is calculated, and here we are calculating the basic earning per share. Obviously in the next lectures we will discuss that in detail, that how earning per share, the basic earning per share, the diluted earning per share, how it is calculated. So this is the basic thing, that we are calculating the earning per share. Now for every company, whenever they are preparing their financial statement, there is a concept of the notes. Why we need the notes? Because here, like we have a note number 1, for example, for the net sales. It means it will give the detail of this 300,000. Now the detail can be of the different type. For example, this is the net sales. Net sales normally means what? That we have a sales less any returns. So it can be giving that information, or the company may have some local sales and some international sales, so they can combine it and they can write it here. So they can segregate in the notes that how much is the local sale and how much is the external sales or the sales through the exports. There may be like a section wise or the product wise they want to show to the shareholders or to the users of the financial statement. So that is the different thing. So for all that, the notes will be there. So the company want to give the detail of this 300,000, so they may give the detail in the note number 1. Note number 1 may be like how much is the sale, how much is the return, or it may be according to the products, that which product they are selling, or it may be according to the, like it's a local sale, or it is the some external sales, like a international sale is there. So it depends, the number of the products are there, so they want to show that how much is the sale, or area wise sales they want to know. So this is the information that they are giving in the notes, and these notes are integral part of the financial statement. Especially when the shareholders are looking at the information, they will look at the notes, and especially the new investors who are the prospects who want to buy the shares, they go through the financial statement and they look at the notes also, because more detail is there in the notes. Now in the same way, we have a cost of goods sold, and the note number 2, for example, is there. So again, what will be in the note number 2? The complete information, like how much is the company's cost of goods sold. The company is a trading company, then how much is the purchases, the opening balance of the stock, the closing balance of the stock. Is there any stock which is not available, which is out with, still not with the company? Then we have to consider also the value of net realizable value, NRV, and then we have to compare with the cost as per the International Accounting Standard number 2. So this cost of goods sold, if it is a trading company, and if it is for the company which is the manufacturing company, then we have a raw material, it may be direct material, labor, factory overhead, work in process, finished goods. We have already completed that cost of goods sold statement. So the complete detail of cost of goods sold statement will be in the note number 2. Again, note number 3 is there, note number 4 is there, note number 5 is there, where the complete detail that admin expense. Admin expense is not one amount. It may be a combination. This 10,000 may be a combination of 100 of different expenses. It includes the rent, the salaries, the depreciation, the insurance, the entertainment expense, so many expenses, stationery, so many expenses are there. So it is the combination. So the segregation, the information will be in the notes. Again, for the marketing, for the selling, for distribution, for general. Even here, if the note number 6 is there, for the interest expense. Like they may be taking a loan from the different organizations, or maybe from the general public in the form of the bonds, or from the bank. So we have to also consider that it is the interest on the debentures, or interest on the bank, or the short-term interest, long-term interest is there on the loan. So all the information will be in the note number 6. Again, for example, we have a number 7 here for the income tax, because the company may have a different slabs of the taxes. How this tax is calculated, how this amount, how much is the amount for the last year they may be pending, or even there is a one concept of the deferred taxation. We will discuss that one in detail. We need a complete lecture on that, the concept of the deferred taxation. Even the sale tax is there, but we can adjust here. So we have a sales tax on the input and also on the output, how it is adjusted. So this information in the form of the notes is just more detailed. So these notes are very important and very integral part of the financial statements. So while preparing the financial statement, even the earning per share, obviously number of the shares will not be written here. It will be written in the complete information in the notes, that how much the company has issued shares. But here there will note number 8 is there, where the number of the shares will be given, that how many shares are there. The company may have a common share or the preferred share. So if the preferred shares are there, how they are treated. So if there is any specific dividend which they have to pay, is there any fixed dividend. So the note number 8 will give you the detail about the earning per share, how it is calculated, and even the comparison for the previous year, that how much was the earning per share previous year, just to make sure that the company's earning per share is increasing or decreasing, or it is constant. It will give more detail to the shareholder. So this is the format of the income statement for the companies. Obviously there are some other information, like in some of the companies we have other income, like we have a main income or the main return from the sales, but there is a possibility that the company has other sources. Other sources means what? They may have a rental income, they have a interest income, or any other income, or even they have an investment in the subsidiaries. So in that companies, the subsidiaries are there, so they have an income from that also. Or there is a possibility they have an investment in the bonds or in the shares. So there's some dividend is there, or there's a possibility that the company may have revalued their non-current assets, like a property, plant and equipment. So there may be any income from that, or there may be any loss from that. So all those other incomes will be considered here while preparing the income statement. But this is the very basic one with the notes and the general information. So this is how we calculate the net profit, and from that net profit obviously the earning per share is calculated, which is for the common shareholder. So this is the concept of the income statement. Still obviously there is a complete detail is there, because for every section there is a complete lectures are needed. So we will prepare lectures one by one for all the sections. We will discuss the cost of goods sold, we will discuss the admin, marketing expenses, then the interest, what maybe the interest is, then the taxes are there, then the types of the taxes, because this is a income tax, but here the sale tax is there on the input, and the output tax is there. So even the earning per share, we have a basic and the diluted. So it needs lot of information and lot of more details in the notes or in the disclosures. I hope until now you have understood the basic concepts, and if you have any question, if you have any doubt, you can ask me in the comment section, and feel free if there is any new topic you want to learn. So I will prepare the lectures on that. Hopefully you will understand that. Thank you very much.